All right, Larry, you do look at your head of global macro. Are there markets in the world that look attractive to you right now?
Well, I'd agree with Seema. I mean, you're talking about equities around the world that have already been through a real grisly bear market. I mean, you're talking about UK equities, Italian equities, and I think it's very clear emerging markets in Europe will come out of this mess first. They let us into it. They're going to come out first.
Where? What do you like? Anything around the world?
I still
make some money.
Still love. We did a Bear Traps report on Brazil in August and in September, pounding the table on Brazil and Bolsonaro. That administration, we see another 20% upside over the next, say, 12 to 18 months. And overall, I think the UK is a special place. I think that they do something around Brexit, and then by January 20th. So those UK equities, I think it's the EWU. I think you've got 10 to 15% upside.
Do you know why I'm asking you about global markets, Larry? Not only because of Seema's excellent report, but you know why? It's because your latest note had your Dow theory chart with the transports and the markets, and you got me so scared, I hid under the bed with, last night, basically hiding from your worries in the United States. How worried are you about the U.S. stock market right now? It looked terrifying.
Well, it's a famous market indicator, and you have to think back. Since Lehman, we really haven't breached what we call real money selling. We cover accounts all across the world, and there's fast money accounts and there's real money accounts. Real money is like the pension funds and mutual funds. And the Dow theory, if it's triggered, where you get lower lows in the transports, lower lows in the Dow in the same period, that brings out real money. In other words, the beginning of a longer-term bear. Whereas in 2011, all the bottoms, 2015, 16, we basically reversed from those levels, and we had spectacular bear market rallies into new bull markets. But it's all up there on the beartrapsreport.com. It's a great blog. But I think Friday we did trigger the Dow theory, and we could bounce from here. We're probably going to go through these lows in the U.S.
Well, that chart, I wish we had the chart where it was the transports against the Dow, because you noted in your report, and they match up nearly perfectly. And the transport index looks like an icicle hanging off an awning, and there's nothing under there from a support thing to keep it up. If the transports keep falling, is 2019 likely, at least the first part of it, going to be a pretty grim year for equities?
Yeah, and it's not just transports. Yes, the first part of the year is going to be ugly for U.S. equities. It's also restaurants. It's any home builders, anything, retail. The XRT is down the most in one quarter since Lehman. And you're talking retail here, retailers in the United States. Consumer discretionary down 16, 17% from the highs, whereas the staples, consumer staples, are actually up the last 3 months. So this is economically sensitive sectors that are being taken out to the woodshed in the United States.